Hey, welcome back to the channel. As you know, on this edition of the casino, where we go over, what happened in the last month. So even though this is in April, but we're really covering March's numbers and just to kind of highlight what's been going on and these high yielding covered call ETFs, the underlining, and what does it mean for, margin investing and how does this really impact? This is not financial advice. This is purely for fun. It is educational to steer you away in the other direction. Or if you're going to engage in this kind of behavior, then, let's keep our portfolio to a very minimal amount into this. Never going full blown. As I've seen inside the subreddits and the people of YouTube, some people have taken out HELOCs, sold businesses, even taken out their kids' college funds or retirement accounts all into these things. So I feel need and compelled to do this investment challenge to show and highlight the risks that are involved in this investment strategy, as well as what these custodians are doing to kind of poke and prod and get this thing going even more so. Up on the screen, you'll kind of see been tracking the round hill strategy and doing this for a year. We did our initial 15,000 across the board, equal weighting, and then tracking the total of dividends received. And so far, for Q1, it has produced just shy of $9,000 in our total dividends, which is 8.4%. I mean, granted, I know total return is not really total return, but just to kind of illustrate what's our return on the dividends on this. When you look into the grand spectrum of like our unrealized, this thing has just tanked, and our current market value compared to what it was, steep decline over there. And then you have to factor in your margin costs too. So yes, even though there has been income that's been spitting off of this thing, it is something to also consider is what's happened to the net asset value that has been going down. And when we look at our amortization schedule, I'm just kind of keeping track of how much was taken out on margin. And at the time, they still said, hey, I can take out $9,000 worth in it. And so far, year to date on my dividends, we already talked just shy of $9,000. I've had $474 worth of margin interest to go pay, and then I put $6,000 into it. So between the both of those, $6,000 plus the $8,000, I should really only have like $14,000 buffer on that additional margin that would let me go take out. And probably should have even be less when you consider, how far this thing has fallen. And that I should theoretically have less, and it should be bringing me close to margin calls and maintenance requirements. But going from a stable financial institution like Charles Schwab into some degenerate gambling like Robinhood to really kind of put this point home, look at what these jackals said. They said, hey, we know you got this $31,000 you've already used. And at the time, they said I could only put $9,000 more. But they're saying I can get some more margin out. Even now, the portfolio is down. They're saying, hey, take out more margin, and that this is low risk. It's crazy. They're out of their mind, and they wonder why, they gamify it, and they try to make these stock sales look like they're doing good, and they're trying to incentivize people to over leverage themselves. And damn, that's the risks I'm trying to highlight here. So I'm in margin. I'm using Robinhood because of the low maintenance requirements as well as the low rates. But when I was over at Charles Schwab, they were a lot more rigid with their margin maintenance requirements, a lot higher, and the rates were a lot higher as well too. It's twice as high. But I think they're a more stable financial institution, and there's a reason why their ticker isn't tanking as much as Robinhood. So going back to our roundhill strategy, I've been tracking several of them. YBTC and MSTW. I'm tracking to track. I didn't actually invest in it when we look at what our overall investment is, but I'll still kind of highlight it. Looking at YBTC, we can see that the NAV started off at 21 in the year. It's now at 29 at the beginning of the year. Now it's at 21, and then always disregard this first one because they're just paying out the profit from the end of the year, and then pretty much from 19 cents as high as 28, going down to 16. So it's been kind of steadily going down as the NAV goes down. And that's kind of what we expect for these things. As the NAV goes down, the dividends go down. Same thing over here at NVDW. We see that, we started off at 40, we're at 34. Those dividends were at 33, we're at 21. And granted, we've had some good payouts like this 42 cents here, but we've also had 19 cents. It just really kind of jumps around depending on what one, underlying to, and two, their investments. TSLW, this is going to be the underlying for Tesla. And we see that we started off the year at 32, we're now at 23. So we're almost 1/3 of the price of where it was. And this was a 16 cents at the beginning of the year, but it's also had 31, 33, but the last one for the month was at 14 cents. So once again, we start up high, and as this thing goes down, we do see that the payments also go down accordingly. COIW, the underlying for this one is going to be Coinbase. And this has also kind of followed the same trail as we've seen the others. And I'll talk about the underlyings more after I get through this, because I think that's an equal part of this conversation. And we're going to see that $22 is now at 12. It's lost almost 50% of its NAV. And dividends, it hasn't gone down as sharp. We have some 10 cents in here, but I also think, this last one was not indicative of what will be moving forward. As I do my end of the month for April, we'll see probably a trend of this declining. Not saying I'm a prophet, but something we can agree on is historical data will kind of lead us to patterns and trends, and that's ultimately what we're trying to determine here. Moving over to PLTW, the underlying, this is going to for Palantir. We see that we started off at 36, and we're going to be now looking at dividends from 16 to 28. Going over to Maggie, this is going to be for our Magnificent 7. We're at 52, now we're at 43. So it started at a higher NAV, so it's not nearly as dramatic as a $10 decrease that we saw over here, but still something to consider that it's going down. It's a lot more stable. I think it's because the underlying's under the Magnificent 7. So there's one, a basket, and then two, more stable and secure companies within it, less volatility. So the IV is going to be lower. And ultimately, I think that's what helps this one stay a little bit more afloat better. And then we kind of see a similar trend. We start at 36, we're at 27, it's slowly kind of ticking down as this is slowly kind of ticking down. But at least this is kind of holding up a lot better than the other ones, not falling quite as hard. Ooh-wee. All right, so this one's going to be for the underlying is Robinhood, that custodian I just finished bashing at the beginning of this message. We started off at 49, and then we're now at 22. Man, what a fall from grace. And then we had 50 cent dividends over here, and now we're at 27, just kind of falling in accordance, tit for tat. This is kind of what I'm expecting to go see with the others. MSTW, the underlying for this one is going to be strategy. We see that we had $11 over here, we're now down at 6. Glad I'm not in this one at the very least. But I knew, with the crypto bear market, I try to limit, some exposure with Coinly already in there. WPay's kind of in there as well. Robinhood, there's already too much of it, so I didn't want to put too much exposure into one particular sector, even though granted, all these are just very sector focused into their own companies. It's not like an indice that will track 100 to 150 companies all at the same time. Lacks that kind of diversification in these. But we see that, this is almost at 50% drop. This is heading right for a reverse split here, probably by the end of the year at the very least. But as soon as, maybe if it keeps this up, we might see it by summer. So the dividends, looking at 13, now at 9, just kind of falling. WPay is an interesting one because it changed its strategy and it's now top W. And it's no longer doing equal weighting amongst its own. It's actually trying to pick the best companies performing out there. So it's going to be interesting to see how this one happens. The first payment we had underneath it was at 22. That's a 10 cent drop from this. But in all fairness, it's not like that's also unheard of because we've seen that 23 cent payment back in February. But, maybe with it changing strategy that we will have more stability. And, we started at 42, we're at 34. Not nearly as dramatic as a fall, but when it was doing its equal weighting into its own baskets of what Roundhill was doing, you have like MSTW and Coinly and these other things that are just dragging it down with it. So that's why they They were listening to what the consumers were saying, and then they changed their approach on WPA to top W. It'd be interesting to see how this performs for the rest of the year, but we'll have this kind of case analysis to kind of see if it stabilizes from here. So that's kind of where we're at with Roundhill, and talking a little bit about the underlinings on it. I'll go with the video. We talked about this last month. Overall, it's still down. It's in the red. Tesla, for its last month, it's down. It's in the red. We look at Coinbase, the last month, it's down. It's in the red. Palantir, we look at the last month, it's going to be down. It's in the red. We're going to go look over here at Hood. That's going to be Robinhood. And, it's going to be down. It's going to be in the red. And then we're going to look at Strategy this last month. It's down and it's red. And in all fairness, the whole market is taking a beating with all the, global politics going on and other factors listened into it. And even Jerome Powell in the last Fed meeting had highlighted that he doesn't even know what's going on with this economy. So it doesn't lend a lot of faith to Wall Street at this time. And when you're engaged in these kind of high risk investments, you're going to be even more subject to the pitfalls of what's happening in the market, because that's exactly what these things are doing. They're doing options, they're doing swaps, they're doing all kinds of things that are going to move a lot more than reg if you're just long in Palantir or Strategy, and without the upside. I mean, it's an income. Kind of just looking over here at yield max, just kind of keeping track of it, just really for fun and seeing what's going to actually happen. I guess I need to update these cells, and probably should have done it before, but I'm kind of hurting as I'm in tax season and trying to make sure I stay to a schedule. So I'm just going to go over each one of these investments and just talking the same way that I talked about Roundhill. We've seen this thing this last month at 7, now it's at 5. It started a year at 8. I wouldn't be surprised if this thing heads to a reverse split by the end of the year, if not by summer. It held up. It didn't go into reverse split when most of Yield Max's stuff did reverse splits. Proud of it, but I mean, it used to be a real good money-making machine, and we've seen some good things come out of it, but also been following those trends. Misty, this is the underlying the strategy, and it had its reverse split last year, 1.5, and then we've seen it like, hey, great, what happened with it? And ultimately, it's just going down, 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 down. It might have a year or two before it goes into a reverse split now that they've kind of taken it back, but we'll see. Then we're going to have a IYY. This thing, man, this company, they did their reverse split back there in the beginning of the winter, and ultimately there's not much they can do to go save this. I mean, we're at $20 over here and we're already at 50%. This thing's going to be ready for another reverse split by summer, end of year. The problem with Yield Max is it boasts high yields, much higher than Round Max, lower than Yield Boost, but you're going to see, because of those higher yields, it's taking such a toll on the NAV. And the distributions are the ones that are going to really help move that needle across the line. TSLY over here, Tesla, it had its reverse split. We were at 40, now we're at 29, and we've just been seeing those dividends go down. It'll probably hold up here for another year or two before it goes into another reverse split. This is a second reverse split, so we'll just keep on tracking it. Murni, same thing, reverse split, underlying. It actually looked like it went up there for a second, which is interesting. And maybe, and you go check how Google Finance is really pulling this in. But if true, that would be great. But yeah, I definitely probably won't spend some time checking on that one. Raro, this one, it didn't go into reverse splitsville like the rest, just kind of like SimC over there. But we'll see what happens. It's now at 5. I wouldn't be surprised if this one has a reverse split by the end of the year. And then Coney, this is going to be Coinbase's one, and we can kind of see the same kind of trends. We had a reverse splits, we're at 46, now we're down over here at 24, and it's just the underlying not doing that great. Fiat, which is going to be the inverse of this. So you would think, because Coinbase has been doing so bad, this one should be doing phenomenal. And it did its reverse split. It was at 25. This one I actually do believe it's at $27, and it's holding it up because Coinbase is doing so bad. And then Ulti, this one had its own reverse split over here, and since then they've been trying to stabilize it and get out of less it's a basket of funds. So they've been trying to introduce more stable funds into it, lowering the IV and trying to stabilize the NAV. We started off at 40, we are at 30. Is it working? Doesn't look like it. Even though if you look at the distributions, we're staying, above 40, but the NAV, because if you can't stabilize the NAV, eventually we're just going to run right back to reverse splits. And then looking at the yield boost, oh man, talking about things that are going wrong with these high yields. This one is going to be boasting over 100% yields. So it's not a surprise that it's just going down fast, and we'll see reverse splits on these things very soon. With a NAV of $3.47, NAV of $9 over here. This one actually might make it to the end of the year. TSYY though, that's on a short leash right there. PLYY, it's got a healthier NAV, but if we look at the beginning of the year to where it is now, how long can it stay before it's going to do its own reverse splits? And we see that the distributions just don't keep up over time because, yield percentages are going to be based off, what's going on over here too. So looking at NVYY, this is going to be tracking NVIDIA, and we see we start at 18, we're at 14, and we start up at 35, we're at 23. As this continues to go down, this will also go down. I don't think it's going to happen before a reverse split this year. It might make it until next year before that we start looking at that. This one is also on a short leash. MTYY, this is going to be MicroStrategies, and we see that, started the year at 9, we're at now just shy of 5. Distributions are 22 cents, or at 9 cents. This thing's in reverse splitsville as well. Put that sucker on a short leash and head it out to the gallows. The underlying for a hood, HOYY. We started off at 14 basically, now we're just shy of 7, so 50% decrease, and even more 50% decrease when it's dividends. So we start at 36, it's at 14. This one, I don't know how much time it's got left. It might make it to the end of the year, but we'll see. COYY, this is going to be tracking Coinbase. We started off at 8, so we're now at 428. Those distributions were at 22 cents, now it's at 8 cents. Yeah, put this one right next to it in the gallows. XBTY, this one is going to be tracking for cryptocurrencies. And as we know and already established, crypto is in kind of a bear market over here. So, it makes sense why we're at 11 in the beginning and now we're at 7 down over here. And the underlying theme in all of these we see as the NAV goes down, the dividends go down. And then AMYY. It has great synergy between NVIDIA as well as SimC over here because of the deals that they're doing, probably even linking up with Palantir at some point. But there's only so much it can do to kind of prop itself up. So we've seen itself at 21, now it's over at 15, and we did dividends at 42 cents. Now we're at 24, so almost 50% decrease over there. But that's kind of what I expect. The higher the yield, the sharper the fall. Yield Max proved it. We see here with yield boost. Round Hill is around like 80% on its yields. So I'm not surprised it's following it. Looking at some other ones like Curve, this one's holding up a lot better given to, what's been going on. It has different kind of strategies in place. So I was looking over at KGLD, and these don't pay weekly like those other ones I was discussing. This is a monthly one. And the month, yeah, we actually had some appreciation on the NAV, and the dividends respected it. Silver cratered, and I expected this one to be far worse. The NAV went down, but they kept the dividend the same. So it'd be interesting to see how it really impacts here for the April updates. So I'm curious to see how this one responds. They've been doing a lot better with their investment strategy. So as the silver market is going to go through its own recovery period, let's see what this one also does. Does it meet the recovery like we see in the underlining, or is it going to be something else? KQQQ, once again, monthly, and I think it does a better job of their investments with Curve. So we have some decay, that is true. We do see a little bit on this, but with the market taking the beating that it has been and the underlying being triple Q, this makes sense. I'm going to be looking over at Amazon's underlying. Well, I'm not going to look at the underlying, but what they're doing, their investment strategy on. This month has not been great for its dividend, but ultimately we did have some appreciation on the NAV. It's still down from its January numbers. The one that's tracking Apple, we're looking a little bit down, but it's not enough where I'm overly concerned, because we did have some appreciation in February and consistent dividends. Goop. I love the name for this one. Underlying for this one is going to be Google. We did see that it did have some, decay on it, but it's keeping its NAV the same. So just kind of keeping more of an eye to see how this one, progresses. But when looking over at how it did in 2025, it's also had some appreciation with it too. I'm not too worried about it. Curve's been a good one to kind of watch. The one that's tracking Microsoft, MSFY, we can see that, even though it's at 18, it started over here at 26. It's had some chances to go up. We can see that there's been appreciation. So, right now, March was not a great month for it. 20-cent dividend compared to 65 in the previous one. But the NAV stayed consistent from right over here. But we did have that sharp decrease from January to February. The one that's tracking Netflix, NFLP, we can see that it had a, consistent dividend, a little bit of appreciation. We'll just continue to track that one. And then last one is going to be TSLP. You know how we like our Tesla here. And, we started over here in 25 at 29. We're now at 19, beginning of year 23. But we'll see how it ultimately still kind of goes. The dividends don't seem like they're messing around a whole lot. Like they're happy with what they're trying to give out. But we'll see. And then Rex shares. I'm not too overly impressed with this one because they were trying to advocate for growth and appreciation. And that's not the case at all. No truth in advertising there. This thing has just fallen like a rock, and this one didn't even have a dividend for this week. They actually did so bad they couldn't issue out anything, which is good. If you don't earn anything, don't issue out a dividend and hurt your NAV. Try to get some kind of growth in there. Truth in advertising, come on. MS, this is going to be for strategy. We can see that March, same thing we've kind of seen with the rest of them, not great. And then the dividends, it ultimately ended on a down note. NV, this is going to be for NVIDIA. Starting off at 25 in the beginning of the month, we're now at 24. Slight decay, but still not showing us the growth it was promising us to go do. And then the dividends are what the dividends are. They're going to say growth and income. I rather see more growth than the income, because if I see this thing go down, it's really counterproductive to the growth that you promise. Even if we get some income, that's still delivering on the income promise. Our last couple ones over here, we got TS. This is going to be for Tesla. We're going to see at 20. Now we're at 18. Dividends are relatively around the same. But once again, if you're promising growth, let's see the growth. Their basket of funds, they're going to go out monthly. Kind of the same thing we've seen. I mean, it's just going down and down and down. I just expect more from when you're saying you're going to do growth and income, and I don't see that growth promise, and it just seems like it's just falling short. So overall, that's what we have. And if you found this informational, rate, like, subscribe. Can't wait to kind of go on this journey more with you. Remember, this is not financial advice. This is strictly for fun. It is educational to guide you in the other direction. And thank you and have a great day.